Welcome back to the channel, everyone. I hope you're having a great day. So today I wanted to talk about finding the Bitcoin bottom or the cryptocurrency market bottom. Now I understand that that's going to be extremely difficult as there's so many factors to take into account, but I plan on doing a bunch of these videos over the next couple of weeks, looking at different aspects, looking at different indicators, and looking at different market conditions to hopefully help us find the bottom. But today we're specifically going to focus in on the similarities between the dot-com bubble and the crypto bubble. And we're going to talk about the differences, the similarities, the data, the prices, everything like that. So before we actually get into the video, make sure you subscribe and like the video down below so you guys stop missing daily content just like this. And also in the comments, let me know things that I missed in this video and things that I should cover in the next few videos. So like I mentioned earlier in this video, we're going to be looking at a lot of different things in terms of data points, numbers, scenarios, market conditions, but I do want you guys to understand that I'm not looking at everything. There's just too much to cover and it would be like a 3-hour video. So definitely in the comments, let me know what I missed and what you wanted me to cover. But again, we're just going to look at a couple things. We're going to have fun with the charts. We're going to try to understand, is this a possibility of what might happen in the markets? And even though the markets don't repeat themselves, they do often rhyme. So one of the similarities between the crypto and the dot-com bubble is very interesting because when the dot-com bubble happened, when you're looking at the cryptocurrency market, they look very, very similar. And some of the key things is that when the dot-com bubble and the crypto bubble both capped out in their market cap and total market cap, it was at $3 trillion. Both bubbles were overinflated in the market and there was way too much hype going on. You had meme coins, you had shit coins, you had a ton of different tech companies that were just coming out of nowhere and they were making money in the stock market. They were getting overvalued. There was too much hype. Another really important thing is that there's a lot of tech in this sector, right? It's emerging tech. When the dot-com bubble first came, it was the internet. No one really knew what it was. No one was really fond of it. They didn't really understand it, but it was new. It was innovative. Now with cryptocurrency, it's the same exact story. Another really interesting thing is that this is leading into a recession. So after the dot-com bubble, obviously we had that massive collapse, and then early 2000s, we had that recession come right after. This is exactly what's happening with crypto. This is going to be crypto's first recession. So it's going to be interesting to see how long it lasts and what impact it has. And the last thing is that there's going to be a purge of bad companies and bad products in both. I mean, if you take a look at the dot-com bubble, there were over like 95% of companies were completely wiped out and gone bankrupt. And then if you look at the cryptocurrency market, I mean, if you go on CoinMarketCap alone, there's over 21,000 cryptocurrency projects. And if you take a look at the top 10 list, anything outside of that, what would you be fond of buying? What would you be willing to hold for the next, let's say, 3 to 5 years? Well, there's probably only a handful of companies. And I mean, even if you scroll down, you have Terra Luna Classic, which literally dropped over 99%. And yet it still has a $2 billion market cap. So I still think we are a little bit overinflated. I think we need to get rid of a lot of these projects, a lot of these companies, and we really need to move towards innovation and not just this hype. But that's enough of me ranting. I do want to get into the charts and I do want to look at a couple of key points, basically comparing the NASDAQ to the total cryptocurrency market cap. Then we're going to take a look at Bitcoin, what it could be doing, Bitcoin's dominance, and then a couple other key data points and some indicators. So like I mentioned earlier, when you're looking at the crypto and dot-com bubble, one of the important things is that you have to look at kind of the total market. For the NASDAQ, that was kind of the, congregation of all the tech companies, and then for the total cryptocurrency market cap, we will be comparing that as well. Now, if we go all the way from the top and bring it all the way from the bottom to right around here, you can see that the NASDAQ or the dot-com bubble crashed around 83% in the entire market, and it also lasted around 930 days, so well over 2 years, almost 2.5 years. Well, if we take that same exact thing and look at the cryptocurrency market all the way from the top and drop at least 83%, that would bring us to around a $504 billion market cap in terms of the entire cryptocurrency space. Now, there are a couple key factors that we also need to think about. One, is it going to take over 2 years? I don't think so, because we're in a different time and this is somewhat of a different sector. And if you just take a look at Bitcoin, what if Bitcoin dropped 83%? Now, I don't think that's going to happen, but it's always good to just kind of look at things like this. So if we take it from the top, drop around 83%, you can see that Bitcoin's price could drop to 11,500. Is that possible? I really do think so. And if you take a look left, these are also around those pre-pandemic levels. So this could be an extremely good support level. But at the same time, when you're thinking about Bitcoin, typically in recessions or typically whenever there is a bear market, that is when money flows back into Bitcoin and money comes out of altcoins. So maybe Bitcoin does not drop the 83% because it could hold its bottom a lot better than these altcoins who are going to drop 90% or more. But that's just one thing that we have to look at in terms of all the other ones. So 11,500 is kind of what we got for that number. Well, another interesting thing we can look at is the amount of drops that the NASDAQ dropped in terms of, during this entire 2-year stint. All the way from the top, you can see that we had this one massive drop right around here. And then what we had is another one. This is probably the biggest one. And then what you see is a third drop and a fourth and final drop into here. And this took over place of basically around, let's say, 2.5 years. Now, if we measure all of these out, let me get rid of these markers. You can see that from the first drop, if we drop all the way down here, it's around a 39% drop. And then if we take the second drop right around here, our biggest one, this was around a 67% drop. From here, the third drop was right around 46%. And then taking the fourth and final drop that kept us at that low was around 50%. So you could see every single drop was at least 40% or more, with the largest one being around 67%. And then that was kind of the bottom for that, let's say, .com bubble. Well, the cryptocurrency market is a little bit interesting because there's a couple of things that we could take into account. So for example, let's take this first drop in the market around 50%. So that kind of meets the same criteria as that drop. Then what we have is all the way from the top over here is a second drop around 65%. Well, this third drop hasn't really completed and it does need to make a lower low. So even if it was just a 40% drop right around here, then it would reach around a $690 billion market cap, or could even come down to right around these levels. And then let's say there is a fourth drop. Well, we have to ask ourselves, how much is it going to retrace? To what point is it going to retrace? And then from that point, how much can it drop? Well, if we go back to the NASDAQ and we look at the average of its retracement levels, that may be able to give us a decent point. So if we go from the bottom to the top, you can see there's around 43%. Right around here, you could see that it's around 56%. This one was around 54%. And then those are really your big three retracements. So you can say the typical retracement could be around 50%, give or take. Okay, so now let's use that number. Let's say that this dropped around that 40% level, and then it retraces 50% from right around this point, which would take us all the way back to right around here. And then let's say we had that fourth and final drop, making it the cryptocurrency bottom. Well, let's say this one dropped anywhere from, we can say 40% or 50%. We'll say right around here. That could, and again, this is all theoretical, this is all speculation, so again, take this with a grain of salt, but we're just having fun on the markets. We're just taking a look at possibilities of what could happen. And the reason that we're charting it out like this is because this one, again, could bring us to a cryptocurrency market cap of around $490 billion, which again would bring probably Bitcoin to below that $16,000 mark. So what we're looking at right now is that the NASDAQ dropped 4 times. And what we're looking at is a cryptocurrency market cap that has dropped once, twice. We're currently in the third one. So what we could be waiting for is maybe we get a drop, a retracement, and then that fourth drop right over here. But there are 2 things that I do want to bring up that could kind of put this theory in the backseat. So the first one is the diminishing losses and diminishing returns. As you've seen over cryptocurrencies, one of the important things to remember is that when you look back in the past of cryptocurrency, the gains have been getting smaller. I mean, if we go all the way back to 2015, ride out this bull market and see how much of a percentage gain that we had, you could see that it was much lower than what we've had in this current one. And so as the years or as the market cycles continue to go on and on and on, the gains that you're going to get, 4,000% returns are not going to be the same as they are in the future because price is just a little bit higher. This current bull market was only 2,000%. Not to say, that's nothing, but still from 4,000% to 2,000%. And then in the future, even if we go back to this all-time high or even higher, you're still looking at a sub 1,000% gain. So that really begs the question, if we're getting diminishing returns, is it also true that we could be getting diminishing losses? And if that's the case, maybe we don't drop 4 times just like the NASDAQ or during the dot-com bubble. Maybe we have 3 drops like this, and we're currently in that last drop to around anywhere in this zone. So that's theory number 1. The next theory is that maybe we've already dropped 3 times. So let's take a look at the drops again. So what we have is this first drop from this top to this bottom. That's the first one of around 50%. The next one that we have is right around here from this top, but maybe it's not to this bottom. Maybe we are coming to right around here. Maybe that's the second drop. Now I know this does not look like a retracement, but if you do take this wick into account and you're taking a look from this bottom to this top, you are getting a retracement around 23%, which is considerable. Maybe it's not a retracement, but it is something to look at. Now for this theory, we're just going to say that is the second retracement. And so what would make this the third drop, this would also be around 42%, which still falls in line with around that 40% drop that we've been seeing. Now, maybe we are in the fourth and final drop of Bitcoin, and let's say we just dropped a minimum of around 40%, could lead us to 690 million or billion. And then if we go anywhere to 50% or 60%, again, that falls in line with around 550 billion and 400 billion, which again could lead the market cap to those pre-pandemic levels of right around here, which again, if you take a look at Bitcoin, since Bitcoin dominance is so high, Bitcoin is probably going to look like the total market cap because a lot of that money is going to outflow from altcoins into Bitcoin, and that could lead us back to around these prices anywhere from 15 to around 12,000. So there are a couple other things that we could definitely talk about, but I don't want to make that entire video just about the NASDAQ and the total cryptocurrency market cap. But one thing I do want to look into is the Bitcoin dominance and what it does during these bear and bull markets. Now there's a couple other theories and a couple other examples I can bring up, but these are probably the simplest ones and the easiest ones to understand. So if we take a look at this one, obviously the Bitcoin dominance drops during the bull markets. Why? Because people want faster horses, people want more gains, and as Bitcoin gives you diminishing returns, people are going to be looking at altcoins that can give you that 10,000x versus Bitcoin, who could just give you maybe a 10x. So during bull markets, Bitcoin dominance goes down because money flows out of Bitcoin into altcoins. And then what happens is Bitcoin becomes a safe haven during the bull market because a lot of those projects are really 1 to 3 year projects. And then what we have is a bottoming of Bitcoin dominance right around here at 35% or around 40%. And then during the bear market, a lot of that money flows back into Bitcoin. And then what we have is another bull market where the Bitcoin dominance drops because a lot of that money is flowing out. And now what we've seen is that we've entered that bear market, we're entering the recession, and Bitcoin is now seen as more of an inflation hedge, as more of a safe haven than something like even gold and a lot of the other altcoins. And so what we can have is this historical bottom of around 40 to 35% of a Bitcoin dominance. And what could happen is we can have a push up from this Bitcoin dominance, which means more money is going to pour into Bitcoin, which also means that even though the total cryptocurrency market cap could drop, then Bitcoin's bottom is probably closer to being in than a lot of these other altcoins and the whole cryptocurrency market. And something that I have to steal from Benjamin Cowan's book is these 4 moving averages. So what we currently have is 4 moving averages: a 100, a 200, a 300, and a 400 week moving average. And if you take a look in the past, all the way from basically to the farthest we can go back to around 2012 or 2013, you could see that these moving averages per cycle have become a bottom for cryptocurrency. And the interesting thing is that every single one, so the 100 is for the first cycle, and the second and the third, and currently the fourth one is sitting at 13,000. So just to kind of show you, if we go all the way back to 2013, what we can see is that maybe this 100-day moving or 100-week moving average served as the first floor right around here for Bitcoin's price. Okay, so this blue line is validated, and then we continue to go on. And then what happens is we have this bear market, and here we go. This is the first touch of right around 2014, 2015. So the 200-week moving average acts as a support. Well, we have to go through this bull market, and then we have to get to our red line. So the red line is the 300-week moving average, which again is our third bull market and our third bear market. And if you take a look, the lowest point that it got was right around here at around $3,800, which again touches this red 300-week moving average, acting as support. So if it's happened in the past 3 bear markets, what's to say it can't happen to the 4th? And if it does, maybe it breaks below this 300-week moving average, drops down, and treats this one at its lowest point at around $13,000. So if you're taking a look at the 300 and the 400-week moving average, really what we're looking at is anywhere in between, let's say, 17,500 and 13,300. So this could definitely be a very interesting accumulation area for Bitcoin's price. And if we extend this out to the left, what we can see is, again, this is also during the 2018 peak. And this is also going to act as a very, very strong support level, because this is also one pre-pandemic levels. And these are also around the levels before we took off right around here. So there could be a ton of buying pressure and a ton of buying power right at these levels. Now, something that's a little more difficult to see is that if we take a look at the RSI, or the weekly RSI, which is the relative strength index, what we can also see is that we can't really go back to around 2013 because the data doesn't really show that much. But if we take a look at the past 3 bear markets, including this one, what we can see is that the RSI has dipped below the oversold area right around here. And when you take a look, this has only happened 2 other times, and it's during the bear market. So right around here in 2015, you could see that we've hit that lower band, that 200-week moving average, and we get that confirmation of oversold on the weekly RSI. Okay, so let's take a look at the 2018 market. So something very similar right around here. We can see that again, right at this area, we do get into that oversold. It's very small, but if we extend it a little bit, you can see that it does dip below that RSI right around here, which again coincides with that market bottom. But then later on is when we hit that lower band of the 300-week moving average. And of course, if we take a look at the most recent price action, what we see is that it's looking very similar to the 2018 bear market, where we have dipped below the RSI already right around here, proving that this could be the $19,000 floor. But just like in 2018, first we hit the bottom on the RSI, but then later on we hit that lower moving average band. So maybe the same is going to happen here, where the RSI tells us we've already bottomed, but then, down the road is actually when we hit this 400-week moving average. So this is looking very similar to what the 2018 bear market was. The RSI bottomed out first, and then the weekly moving average was the bottom. What we're having is the RSI bottomed out, and later on, the 400-week moving average could be that bottom. And the last thing that I want to bring up in this video that could be interesting is that when we're looking at the 2018 bear market to this current bear market, I think it's going to be the most similar for a lot of reasons. But again, now that we're getting a lot of institutional investors in, we're going to start to see a little bit more manipulation in the markets. And one thing that we saw that is very interesting is that if we look at the 2018 bear market, obviously everybody and their mom and grandma thought that this was the floor. I mean, nobody thought that Bitcoin could break $6,000 for basically months. It hit this $6,000 floor, and it just acted as a support, and it could not break. And for the longest time, we had this trustworthy floor, and out of nowhere, boom, it just breaks immediately, and then it rallies to the upside. Now, you have to ask yourself, do you think that this was a coincidence? Do you think that for months that the 6-month floor or $6,000 floor was built out, and then out of nowhere it completely collapses? I mean, this could be due to a ton of factors, but if you're looking on the other side of it, do you think that some institutional investors, some large traders, maybe some whales broke this floor, set in that selling pressure, bought at these lower prices, and then bought it up? Because if you look at from 6,000 to this floor, it's another 50% drop. So that's quite a hefty discount on Bitcoin already. And again, if we take a look at the market right now, doesn't it feel like we are just consolidating at that $20,000, $19,000 level? What we're getting is multiple touches. People are getting confirmations that yes, the floor is in. We are going to continue to keep and treat this as a floor. Maybe we get a couple wicks down here, maybe we don't. Maybe we go up a little bit. But at the end of the day, this is a very strong floor, and I'm sure there's a lot of buy limits here. There's a lot of buy pressure in this area, and now that we have institutional investors, maybe what we have is an insane sell-off event to where it does push us back to those levels where we were talking about, anywhere in between 17,500 and 13,500. So that accumulation area, do you think big money is going to be in there? Do you think that they're going to get their hands on that cheap Bitcoin? And then what happens is immediately after we rally, well, that's definitely a consideration. And again, when we're looking at the time frame of this, if we take a look at just how many days this played out all the way over here, what we get is that this took around 363 days, basically an entire year of consolidation right around this point. Now, again, what you could say is that this was the bull market and then this was the bear market, so really it didn't happen. Then you could bring up the point that, okay, maybe you go from this bottom right around here, but even still then that's around 283 days, which is the better part of a year. And even if you bring those days out to right around here, you can look at, from this bottom to right around here, that would bring us into basically Q2 of 2023, which could make sense because as the Fed is continuing to raise interest rates, as we're going through the recession, as we are losing jobs, unemployment is going to be going up, inflation is getting sticky and it's staying high. Maybe it does take us into that early Q2 of 2023. And then maybe the Fed pivots. Maybe things start to get better. Maybe people are getting their jobs back. Maybe we're starting to see growth in the economy. And that could be the point when Bitcoin starts to pivot. And again, you have to remember in 2024 is the Bitcoin halving, which could be an extreme catalyst for why price could move up, or maybe it's not. But again, these are all just theories. These are all just us looking at the chart, seeing what possibly could happen. What is the Bitcoin low? What may happen during all this? But I don't know. I just wanted to make this video for you guys. I hope you guys found some value from it. If you did, make sure you like and comment down below. Let me know what you like, what you didn't like, and what we should cover next time. Till the next one, see you guys then. Peace.